Once a luxury had, now a necessity. Credit card debts in this country, over $1 trillion. But yet, the news is out. Black Friday just happened, and we set some records. $9.8 billion online.
$9.8 billion.
That's 7.5% over last year. With all the things happening, with inflation still running hot, with the Fed saying they're still not done, they're gonna keep rates higher for longer, which means everything's gonna cost you more. With inflation still well above 2%, war may or may not be on the horizon. Oh, let's not forget, we're right now November of 2023. In 1 year from now, we will be into the next presidential election. You might as well get the popcorn stock ready and the soda, because it's gonna be an epic journey into next year. But we're gonna talk today about some of the things that you can do to opt out of a recession. I did say that right, opt out. But that's gonna take a little bit of thought from you, but not just thought, a little bit of action. Because if your job ended tomorrow, if you got fired, are you gonna be able to pay those bills? These are some of the things we're gonna talk about, and I'm gonna show you exactly how you can opt out of the recession that's looming in the near future. My name's Chris Naugle. This is What Now? What's next for you? I can't help but to just understand what's coming. And you know how I understand what's coming? Well, let me share some of the facts. So in Business Insider, there was an article about one gentleman, Gary Schilling. He's a pretty legendary investor. So Gary expects a 30% crash in stocks. That's right. He says a recession is definitely happening. And he says not only that, he says there's probably going to be a collapse in commercial real estate. That actually kind of makes sense. And he's issuing a dire prediction that you need to be careful. You need to be liquid. And he even goes on to say that cash is not a bad place to put money. And you know who else just said that? Ray Dalio. Ray Dalio hates cash. But he also did an article, and I watched an interview he did where he said, now is the time to have some cash. And here's what Motley Fool says. Motley Fool is talking about the bond market sounding an alarm. They go on in this article to talk about the US Treasury yield curve. So let's just talk about the yield curve. It's very simple. Let's say you got a 2-year Treasury bond and you got a 10-year Treasury bond. You have two bonds. Now let me ask you a question. One that matures in 2 years versus one that matures in 10 years. Which one should pay a higher interest rate? 2-year maturity or 10-year? Well, the 10-year holds more time risk, more interest rate risk, so therefore it should pay a much higher interest rate, right? Because you're holding it for a longer period of time than you are a 2-year. But you see, when the yield curve inverts, what happens is the 2-year pays more than the 10-year. And there's a whole bunch of these inversions that have happened all the way back to 2022. I've been covering this since it happened, but Motley Fool says this one is steeply inverted today. And it hasn't been this inverted since 2000, or since the dot-com crash. Every recession that has happened since 1955 has been preceded by an inverted yield curve. So in other words, every time since 1955, when the yield curve inverted, the following thing that happened was, well, put it in the comments right now. What happened? A recession every single time. I think if I'm not mistaken, the numbers, like if you're 37 or 38 years old or younger, you've never felt the impacts of a recession. Now that's crazy, but it's really not, because we've had the longest bull run in history, which is exactly why most people don't even think a recession could happen. And because the Fed says, oh, there's a 0% chance of a recession. No, we got this under control. We're gonna soft land this plane. You guys have been in those like plane rides, right? When the plane hits the tarmac, you don't even know the plane's on the ground. Did we land? Hey, did we land? Really? We're on the ground? But then people like Gary and people like Munger and people like Ray Dalio say, we are literally coming in nose first, and we're not gonna soft land. Matter of fact, we're just gonna put this puppy straight through the ground. Sorry, it's gonna hurt. Here's what hurt feels like. When we go back and we look at 10 recessions since 1955, and we try to figure out how much of a loss you can expect from the S&P 500. Why do I pick on the S&P 500? Well, it's the 500 largest stocks, so let's just start there. 32% is about what you can expect. What do I mean by 32%? I mean, you're going to lose 32% if you're in the S&P 500, because that's about how much the S&P falls, and that is the last 10 recessions since 1955. So when you're thinking about it, can you handle a 32% drop in your 401k? Can you handle a 30 to 50% drop in your 401k and your brokerage account and all your stocks? If the answer is no, or I'd prefer not to, cool, opt out. Just click the button, opt out. I would like to unsubscribe from the recession. But what that means is you need to get out of that harm's way, because we know that there's a recession coming. And I gotta give you one more. Remember I said earlier that we just set another record? That's right. $9.8 billion was spent on Black Friday, primarily on credit cards, which is why we have over $1 trillion in credit card debt in this country. Car loans exceeded student loan debts. Oh, and by the way, student loan debts, yep, you're going to get a bill for those student loan debts. If you go online and you look at the top retailers, let me just give you some of the top retailers: Walmart, BJ's, Coach, Kate Spade, Dick's, Best Buy, Abercrombie & Fitch, and so many more. When you look at their forecasts for the future, they are all pointing lower. And to further that, I did another video on Instagram. When you look at box manufacturers, yeah, the companies that make cardboard boxes, when you look at their forecast, they're way down. And then you translate that back to recycling companies that produce the raw materials to produce cardboards, they're way down. And you look at commodity prices, they're way down. So what am I trying to tell you? Well, I'm simply trying to tell you that they're making less boxes because there's going to be less sales and there's going to be less of a need to ship goods and services in the future. What does that all spell? A slowing economy. Exactly what the boys over at the Fed, including Jerome Powell, want to happen. What does that mean for you? It means you better start really getting your finances in order, because it's coming. Let's talk about something that you need to do. One of the most important things if you're going to opt out of the recession is you need to subscribe to this channel. And not only that, there's a little bell. Yeah, look at that. You gotta smash that bell. That was pretty good. Ugh. Every time I hit somebody with that thing, I try not to, but it always takes somebody out. Holy shit, I hit the spring. So here are some things that you absolutely must not do. You must not get distracted. If we look back at the last election, it was polarizing. People couldn't stop talking about it, and it just divided people. And if we want to avoid a civil war, we need to stay focused on loving one another. You also must not fall into FOMO. But here are some things that you have to do. You need to create a budget. That's right. All your income and all your expenses. I need you to write them on a piece of paper. It's just a T chart. That's all it is. You just draw a T and you write income and you write expenses, folks. After you subtract income from expenses, if it's a negative number, we got a lot more work to do. You must follow your budget moving forward, because if you just keep spending everything you make, when your income goes down or your income goes away, how are you going to continue to maintain the debts? If you're living paycheck to paycheck, I got some news. You're going to have to hustle a little harder. You're going to have to get yourself a second job. Yes, you're going to have to not watch the game or watch the game from your second job. I'm sorry, but that's the hard work that's got to be done. When you look at the successful people out there, the people that are doing and living the life you want, what did they do? They did what you or what other people were unwilling to do. That's how you do it. They solved so many people's problems that they literally solved their own problem in doing so. But what else can you do? Diversification, okay? If you're going to stay in the markets, if you're going to continue putting money into the 401k, you better be diversified. And here's a piece of advice that your advisor probably won't tell you. I would suggest not riding this one out. I'm sorry, but if it were me and I'm in a raft and there's class 5 rapids with a 500-foot waterfall coming, what do you think I'm gonna do? I'm gonna jump out of the boat and swim to the shore. And some of the yahoos in the boat are like, hey Chris, we're just gonna ride this one out. Meet us at the bottom. Okay, I'll meet you down there. Some of you aren't gonna make it through that. Like, so get out of the raft, swim to the shore, take the bridge over the waterfall and the nice smooth path down. You don't have to ride the waterfall all the way down to the bottom. Sell the winners and just sit in safety. Where is safety? I talk about treasury bonds all the time. It's one of the best times, in my opinion. This is not financial advice. I'm not giving you investment suggestions, but I am telling you that treasury bonds, because of the crazy Fed action of raising rates, treasury bonds are super inexpensive to buy, especially long-term treasuries, and they're all paying a good yield. Yes, you can get paid a very good interest rate for treasury bonds. So that would be a thing to look at. Make sure you're diversified. I tell people sometimes if you can't handle the heat in the kitchen, then get out. Get out of the kitchen. Sit in a money market. They're paying like almost 5%. I was just on the phone with one of my clients today. He's getting 4.5% at his bank, and it's not even a good bank. 4.5%. You know, I know some people that take excessive amounts of risk, at least back in the day. They took a lot of risk to make 4.5 to 5%. Now today you can get that guaranteed, okay? Guaranteed by the full faith and credit of the United States of America in treasury bonds. What else you gotta do? You gotta get out of debt. So what we gotta do is learn a strategy called the infinite banking concept. And we gotta understand that that strategy will help you pay off your debts, will help you take back control of your money, and will put your money in a guaranteed instrument, a guaranteed vehicle where you can't lose any money. And you still have liquidity of that money that you can redeploy it when the time is right. Hence what I just said, when the time is right. Right now probably isn't the right time because the markets are at highs, real estate at highs, and where's it going, folks? Down. That's that waterfall I talked about. Get out of the raft. Find high ground, find safety, find diversification, and then when it's going down, dollar cost average back in. This isn't very hard, folks. So, for today's episode, what did I start with? We're gonna opt out of the recession. Those are the ways you do it. Don't participate. Don't allow your money to fall 32% like it would have in the past 10 recessions since 1955. Don't allow yourself to be bought into this whole invest for the long haul. It's a paper loss. Just ride it out. You'll be fine. Maybe you will, but more than likely you won't. Because so many people invest with emotions. And I can tell you your emotions will flare up just like a hemorrhoid. When the market drops 20, 30, or 40%, it'll be the worst case of hemorrhoids you've ever had, except for it won't be hemorrhoids. It'll just be a flare up of emotions, and it will be, holy shit, I should have listened. And then at that point, all you can ever say is, I should have, I could have, I would have. Listen, hemorrhoids aren't fun, and losing money isn't fun. So, opt out. This is another episode of What Now? What's next for you? Oh, and by the way, if you haven't already, check this video out right here, 2025. That one will wake you up.